Well, this session is being recorded, so anybody who wants to listen again, or if you want to listen to the other breakout groups, you can access this after the AGM. I'm going to hand over to Sam now, who is from the International Not-for-Profit Reporting Foundation, who's going to tell us more about the International Not-for-Profit Accounting Standard that is just released recently, and it's going to be wonderful for the international charity network. So I am going to hand over to Sam, but please do put any questions that you have in the chat, and hopefully we'll have a small chance to respond to some of those questions at the end. Over to you, Sam.
Absolutely. Thank you so much, Lizzie. I hope you can hear me okay, and I hope the internet holds out. I'm English, as you can probably hear, but I've been in Uganda for 25 years. And I've been Musoke, I'm married to Uganda, and hence I get that lovely African name. And it was fascinating seeing in the chat just how many people on this call, on the whole AGM, are from Uganda or working with organizations that are working in Uganda, although it's global. It's just great to see that. And I have worked with a lot of small charities, and in INPRF, the International Non-Profit Reporting Foundation, that I now work for, is itself a small charity. So this is really, really at the heart of what I'll start with three simple questions, and maybe you can just answer in the chat or with a thumbs up or some sort of emoji response. The first is, do you care about the level of burden that your grantees have when you're doing that, when they're doing grant reporting? Is that something that you're concerned about? Are you concerned about the burden on grantees when they are doing their grant reporting to you? Be able to do some sort of reaction. I'm thinking of going to more. How do you get reactions? Is there a way to like, oh, there we go, thumbs up from Lizzie. Is there anybody else who cares about the burden on their reportees, on their grantees? Hopefully that's a thing. The next question is, do you find it easy to get confidence about the financial integrity and the financial sustainability of the organizations that you're granting to and working with? I can't really see any reactions, but never mind. I'm guessing that for many of you, that isn't the easiest thing to do, because financial statements aren't all that easy to read from around the world. And it's not always easy to know just what is the financial situation of that grantee organization. And then my last question is, how easy is it for you to get confidence about the use of your funds, the grant funds that you give to other organizations? You want to get that confidence that it's being properly used. Is it easy to get? Is it medium? Is it actually quite hard to see how your grant sort of fits in with the whole? The reason I asked that question is that somebody actually reached out to me by email and said, I struggle to see it because the grantee organization that we give to doesn't have restricted fund accounting. It doesn't do fund accounting in their books. So it's not easy for me to see. So this new standard, INPAS, is really about solving those problems. We want to be confident that grantee orgs are okay, that it's a financially good organization. We want to be confident that our funds are properly used, but we don't want to increase the burden on them or on us. So one of the challenges is that there has not been any international accounting standard for nonprofits. There are national standards. So if you're in the UK, you've probably heard of SORP, the Statement of Recommended Practice. If you're in Canada or the US, I didn't see many people there, and sort of a handful of other countries have their own standards that are nationally applicable. But if you're in Uganda or 92% of the world's countries, there is no national standard, and until last year, there was no international standard. So when we're following all these different other standards, there hasn't been any requirement for fund accounting, and therefore it's hard to see how a particular grant sits within the organization's financial statements. Now, what this means is that you end up with every donor requiring their own, in good faith, like, I need accountability, so please can you use this format or that format. You might have this with your own donors. You might also be having this with your grantees. Regulators in each country also require different things, and the organizations that end up bearing the brunt of that are the non-profits. And of course, the smaller you are, the more that burden is proportionately large compared to everything else that you're wanting to do. And it becomes this distraction. Finance is nothing but a means to serve the mission of the organization. It shouldn't be it should be a little side thing that has to work well, rather than spending all our time and effort on it. So this is why INPAS was developed. The idea is to streamline the accounting, eliminate all these redundant and duplicative, only slightly different formats, help local organizations to enhance their credibility with overseas donors and other stakeholders. So if I'm a small non-profit in Uganda, I can present financial statements in accordance with an international standard, and anyone in the world can go, oh, I can understand those. That looks credible, and it helps reduce the barriers of accessing to funding. It can help with grant making due diligence. So if you're a grant maker and you're trying to make sense of an organization's financials, if they're produced according to INPAS, we've made sure that most of the sort of questions and issues that grantors could potentially get from a set of audited financial statements, they should be able to do that through INPAS. And also just getting clarity on the use of unrestricted funds as well as restricted funds. And hopefully this can drive not only more quantity of funding, but also quality. So at the moment, if I give an unrestricted grant, it's probably quite hard for me to see how that organization has used it. Also, we know there's a lot of discussion about support costs. Some donors are very reluctant to give money towards support costs or overheads, again, because there's not much transparency about it, and it gets improved in INPAS. So what we've got is this really surprising combination, improving the quality and the reliability, but also reducing the burden, because we've got more consistency, more harmonization, and we're trying to tick many boxes with one process, which is a process that happens anyway, the annual audit. It's a thing that is going to happen anyway. Let's make it happen in a way that serves everybody's needs. So INPAS has actually got two bits to it. The main standard, called INPAS, the main standard, if you like, is about 300 pages. Think of it as a SORP. If you're familiar with the UK, think of it as SORP, but written for an international audience. It's what covers your whole of entity year-end accounts. It's built on existing international financial reporting standards, but those are like 10,000 pages. This is 300. And as we've been developing this over the last 6 years, and I'll tell you a bit more about how it's developed, it's absolutely had small and medium-sized organizations have been at the front of mind while thinking about what's relevant, what's going to be important. It's not written for the tiniest micro CBO. It's not written for Oxfam or the UN. It's written for small and medium organizations that want to or have international or national, but want to grow sort of interactions with stakeholders, whether those are funders or other types of stakeholders. So that's the main INPAS standard. Now, if you're in the UK, don't worry, there's no change from SORP. What you might see is that SORP over time will align with INPAS. But think about the organizations that are in other countries, we will see this being adopted. For example, Kenya made an announcement on the 21st of October, the day after we published, that they will be adopting it. And please look out, soon we will be hearing from Ethiopia and Uganda, at least this quarter. And I believe there are other countries that are in the process of making adoption announcements as well. So this standard that's for sort of entity level, it's up to countries to say non-profits in our jurisdiction will have to use this. So how this is relevant for you is if you are a non-profit in one of those countries, then look out for this. If you've got grantee organizations in other countries, make sure that they're aware and they know this is coming.
Sam, can I just interrupt you a second? Are you still,
sure.
We can still see the first slide. I don't know if you'd...
Can you? I'm on slide 6. Okay, let me stop sharing and reshare.
Sorry, yeah, I just...
yeah, thanks for letting me know.
No, it's okay. I assume that was the same for everyone else, that you could just still see the same first slide. Sorry.
So, no, there we go. So this is what you missed. You were
Sorry,
just seeing
it was
this,
Lizzie
right?
that
Okay.
noticed.
It was so good. It was all just, complimenting what I was saying. But there we go.
Yeah,
The problem.
I'm so sorry.
No, thank you for telling me. The solution about INPAS and what it can do, and this combination, this win-win. And now I was just talking about this INPAS, the standard, which is adopted by countries. Now, the other part of it is INPAS Practice Guide 1. And this is about harmonized grant reporting. So most the SORP and most international accounting standards don't deal with grant reporting. That's really up to each donor. And, the world has been complaining about multiple donor formats since as long as I can remember, but there's never been a sort of international way to solve this problem. So what we thought is because so many stakeholders told us we should work on this, we worked with many donors to produce a harmonized grant reporting format. And these link to each other so that at the moment, grant reports are very often untethered and unlinked to the annual audited accounts, which also creates a credibility problem. And it means that many donors are nervous about double funding fraud, and that kind of seeps into the whole mentality about compliance and everything else. What we've got with this is the way that they interlink means that it makes double funding fraud much, much harder to go unspotted by auditors, and therefore donors can just not worry about it so much. And this, if you're a grant maker, this is a great thing that you can pick up immediately and use with your grantees, however small they are, even tiny ones. If they start using this as a way to do their grant budgeting and grant reporting, it also means that when you step out of the scene and that you want to prepare them for receiving funds from other types of organizations, they're ready to go. Their systems are set up to handle what will become the prevalent donor reporting format. Now, this isn't up to countries to pick up and use, it's up to grant makers to pick up and use. The first one that I know is using it is FCDO, which is interesting because they're one of SIDCN's funders. They are running they're looking at amending their reporting template, and they're running a pilot to test it out with grantees, and then they will roll that out. I know a couple of other government funders, but there's also some of the philanthropic organizations. So Oak Foundation, the Global Fund, to name but a few. So this is something that donors are picking up to use. And hopefully we'll see that just sort of snowball, and we'll get more and more harmonization around that. So they are designed to be used together, but either can be used without the other. So if you're in Kenya, then you're likely to have to be using INPAS for your year-end accounts. But you could also be in another country that isn't about to adopt INPAS any minute, and yet your donor might require you to use Practice Guide 1 format for your grants. That's fine. You can do one without the other, but the biggest benefits come when they're together. Let me show you what it looks like, just so you can visualize it. And it probably looks like 90% of most of the grant reports you've ever seen. So the income is just grants and then other, and there's notes for each type. So if you need more information or analysis, you can in the notes. You can't change these headings. You can add information in the notes, but you can't go amending them, adding them. You can obviously take off a line if it's got 0. Then the expenses are split between direct and support. Support is the new name for overheads because it's just less toxic. And it shows how important such costs are for enabling an organization to run. Then the direct costs are split between employment, travel and subsistence, supplies and materials, external services and anything else, services in kind and gifts in kind. That's, for example, if you've been given a gift or a service in kind as income and you need to show how it's been expensed. This also means that if you're given things like, I don't know, legal support or free audit fees or something like that, it doesn't have to increase your support costs. You can actually show them, as a separate line. And then if you're a grant making organization, the grants to others. Now, if a donor, if you as a donor say, well, this kind of matches what we want, but we have to have information about X. For example, the World Bank said, this is fine, but we have to have a line about consultants. Like, well, but not everybody wanted that, so we didn't end up in the final. But if the World Bank picks this up, and they haven't said they will, but if they do, they could have in their grant contract, please use PG1 for your grant and your grant reporting. But in note 6, please make sure you itemize out consultants' costs, because we need that. This way you get the standardization from a standard set of headings, and you get the flexibility for each individual donor's thing that is their thing to add it on without breaking the whole. You don't have to throw the baby out with the bathwater. If PG1 doesn't have exactly what you need as a donor, you can use it as a base and then add on what you need. One of the key things here that you'll notice is that these are, I don't want to get technical, but these are natural expenditure classifications. This is what you're spending your money on. What are you buying? They're the inputs. It's not the outputs. It's not the activity. It's not the missional area that's being covered. It's not, vaccination program or, workshops to train nurses or whatever. It's not by activity. It's by input. And that's really important, because you can never, ever get harmonization at the output level, because everybody's is different. It even changes from one year to the next, leave alone between different organizations. But if there's a need to do, that doesn't mean that activity-based budgeting and activity-based costing is not relevant or it's dead. Of course not. We just wanted to get harmonization at this level. And we also have seen many organizations, small, really get their knickers in a twist over the way that they put their expenses. Classification by input is like accounting 101. You've got to have that. You've got to see how much am I spending on salaries, how much am I spending on travel, and then you can add on another layer to look at, well, which donor is paying for it, or which type of activity is it going towards. And at the moment, many organizations have that kind of all mixed up, or they got it in batches, and you have this sort of expenditure code ledgers that are like 400 lines long, and it's just hideous. So what we've done here is try and say, well, 101, the basic thing is by type. And if you use these headings, even in your chart of accounts, and you can have obviously sub-accounts, whatever, it means that you can so easily map then to any donor report. You can have the level of detail that you need that's relevant for you, but you can always map it to a donor report. And if your donor wants, or if you want to do the whole of these expenses or just your direct costs restated by activity, you can in the notes. Like, a donor could even ask for that. If this doesn't meet what they need, you can say, well, give me this report, but then also give me something else in the notes. Now, obviously, the more each donor asks for their own special thing, the less we get the benefits. But it does mean that we have that flexibility, and that really most donors should be able to pick this up and use it. Now, what's really key here is that this column, this main column, is in the NPO is non-profit organization, and it's what we call, it's broader than NGO, and it's not charity. It's like any organization that, and it's defined in INPAS what that means, but an organization that doesn't exist to make profit as its primary purpose, and that it, like, for example, if it wound up, its assets would go to another non-profit. They don't belong to anyone. And that any surpluses that are generated are fed back into the charitable missional activities rather than given out to private individuals. Now, this column is for the whole organization for the whole year in the NPO's own currency. And why that's really important is that enables a reconciliation to the whole of entity accounts. What you can imagine is this one column becomes one row of a note in the accounts. I don't want to get too technical, but just believe me, it creates this amazing link that's really strong from an accounting point of view. But that's not necessarily very useful for all donors, because they might say, well, I want to see it in euros or pounds, or my period doesn't match their financial reporting period. Can I see it broken down into different months? Or you might want to say, well, we've got, a basket funding, we've got 2 or more donors or income sources funding a shared project. It might even be that, the donor's paying for this amount of the project, but there are certain project related costs which the donor won't cover, like Forex losses or support costs or things like that. That's a really tricky area. And what this format does, when you look look at them, you can see some of the template formats, provides transparency around that stuff that enables small organizations to understand what's going on in the way that the finances are laid out. And it enables donors to see what's happening, and it enables a grown-up conversation about those risks and challenges and how organizations want to share them. So that's kind of what it looks like. This was not dreamt up by some person sitting in an ivory tower by themselves in England, copy-paste the rest of the world. This was over 6 years, $4 million worth of funding, 169 countries, over 15,000 people. We're now up to 18,000, by the way, since we published. There was a consultation paper, 3 exposure drafts to reach this final standard. And you can see here, I won't go into all the details, but we've got a governance group that oversaw the project, technical advisories, those are national accounting standard setters from different countries, practitioners, that's auditors and NPOs and consultants and academics and all sorts of the people who live in the real world, not accounting standard setters, but people who actually have touch base with the reality from time to time. Country champions in 50 countries. And then a donor reference group that included the World Bank, the Africa Development Bank, Global Affairs Canada, FCDO, USAID before they imploded, as well as many philanthropic organizations like Gates, Hilton, OSF, Oak, Ford, etc. So this has really been
Just to let you know, we've got 5 minutes left until we join back in the room. So just to give, a few minutes for Q&A, just to give you a little...
Excellent. I will stop then. Just what to say, what could you do? You could think about using this donor reporting and see if it matches to your own budget lines. You could adopt it. You could advise your grantees about INPAS, visit the website and sign up. And then on this deck, which you will get, there's some really good links there.